Hello team, welcome back to a new educational video. This one is a follow-up as per your request for the journaling and trade review one. As you remember, in the journaling video we talked about one of the biggest reasons traders stay stuck, and that was because they never review themselves. We covered how journaling helps you identify emotional mistakes, execution problems, overtrading habits, timing issues, and the patterns that are holding you back. Because trading improvement doesn't come from taking more trades. It comes from learning from the trades you already took. And we also learn that a journal should track your entry and exit, your reason for taking the trade. It should include screenshots before and after execution, the session and time of day, your risk reward, your emotional state, and whether you actually followed your plan. Because the goal is to understand why a trade was a win or a loss. And we also talked about something that many traders overlook. A winning trade can still be a bad trade, and a losing trade can still be a good trade. What matters is the quality of the execution, not the outcome. Because if you execute well consistently, the results will eventually follow. So we journal both good and bad trades. After the journaling video, many of you asked, can you show us what this actually looks like on a real trade? So that's exactly what are we going to do today. We are going to take a real setup and walk through the entire process. Analysis, entry, trade management, exit, and journal review. You'll see how the trade idea was formed, what confluences were present, how risk was managed, where profits were taken, and how the trade was journaled afterward. Because journaling only becomes powerful when you apply it to real trades. So let's jump into the chart and break this one down step by step. Let's see the trade. We have this price action here, which at the first look seems to be a free wave move down, with this consolidation here looking like a wave 4. So I'm seeing it like this. This is 1, 2, 3, looking for a 4, and another move down for a 5. If this is the case, as per Elliott Wave rules, wave 4 should not go above wave 1 low. So this will be our invalidation. What this means? This means that if wave 4, if price goes above this line here, then our count is no longer valid. I'll try to keep the Elliott Wave part super simple now, because we'll have another educational video next week covering the basics of Elliott Waves, and we'll talk about how price moves in 3 and 5 waves, and it would be easier to understand that. In order to verify our waves, we use Fib retracement in order to measure wave 2 from the high to the low, which also break market structure here. On this low here, we have a daily market structure break. Even though we have a little red candle here, this one is the most obvious low that made the high. So in the market structure break here, we are looking for a pullback, and we have our pullback between the 382 and 0.5. So this one is fine. Now for wave 3, we use a Fib extension, measuring wave 1 to the high of wave 2. And we get a 1618 Fib extension for wave 3, which is also good. Now, wave 1 should have 5 waves, and you can clearly see it here. 1, 2, 3, 4, 5. Wave 2, the corrections, should always have 3 waves. And we can also see here 1, 2, 3 waves. We can measure it with a Fib extension from the low to the high to the low, which is a front run of 1 to 1. It's a 786. So this one also works. Now, in order to find the target for wave 4, we use a Fib retracement from the high to the low, and we get the 382 here as the first resistance. According to Elliott Wave, you can use the Fib retracement to find out the target for wave 4, measuring the top of wave 3 to the bottom. But as we can see, we get mainly the same area of interest for shorts. So I'll keep the first one, from the high to the low. For extra confluence, we can add a volume profile from the high to the low. I don't think this one will load in replay mode. No. Okay, we remove it. Then we add an anchor VWAP from the high, and we get another confluence in our zone. Now, in order to enter a trade, we don't blindly set limit orders here. We wait for the price to reach our area and see the reaction there. And because this one is a higher time frame trade, it's a swing, which I'm willing to hold for several days, I'll go on a lower time frame for an entry, but on a lower time frame like the 30 minutes time frame, not the 5, because the 5 is too choppy for a higher time frame swing position. On a lower time frame, we zoom in and we let price play until it reaches our area of interest for shorts. Now it has a first move up, and now we wait on the way down to see if she prints a market structure break, which will be at this low here. We zoom in a little and we let it play again. Price goes down, but doesn't print a market structure break. It goes up again into anchor VWAP and 382. Now we wait for a market structure break on this candle low here. And we let price play again. Now we have our market structure break. This candle here closed below the low of the candle that created the high. So in this scenario, you have two options of entering the trade. You either enter right here on the candle that broke the market structure, or you wait for a pullback and you use a Fib retracement from the high to the low that created the market structure break. You can also use a volume profile, but on the replay mode, it doesn't work for me. So now you either wait for price to reach 382 or golden pocket, and you enter on market, or you set a limit. And because this move down was pretty aggressive, I'll look for a small pullback on the 382. So I'll set a limit order now, like this. So I want my limit to be at the 382, and I want my stop loss at the high, and the take profit will be set a bit later when you go back on the daily chart, because we started the analysis on the daily chart, we only enter and execute it on a lower time frame. Our take profit will be based on the analysis we did on the daily chart. And we can see here that if we bid 1 Bitcoin here, our stop loss will be $770. This is our risk. If everything is okay, we press sell. We get a notification that our limit is active. And we leave price play. Our order was filled, and now we are in a position short. From here, we go on the daily chart and we look for lower targets. We zoom out. Because price didn't go past our invalidation line, this means that our count so far was correct. So we're looking for another move down for wave 5. And for that, we use Fib extension to measure it from the start of wave 1 to the bottom of wave 1 and to the top of wave 4. And we get two targets, 121 and 1618. 121 because it's a swing failure pattern of the main low and takes all the liquidity below. And 1618 because it's the most common target in Elliott Wave. So I'll add a limit in order to take profits at the 1-to-1, slightly above 75, let's say 300, like this. I want half a position, 0.5 Bitcoins. The take profit levels, you decide how much you take at each level based on your strategy and on your risk management. I want half here, so I place a limit and I click buy. Now we let price play until it reaches our area, and we have our take profit 1 reached. If we look down here on our trades, we have a profit at $10,780. Now we leave the rest of the position for the 1618, where we place another take limit above, let's see, 61,200, a little bit higher than the level, like this, another half position, and again We let the price play and we wait. Have our take profit to hit. Now, if we look of positions, we have $17,998. And the first one was 10,000. Now, based on this information, how we review the trade? In Spitfire, we have two models of journals. One made by Spitty, which is a Google Drive, and it looks like this with an Excel. And you have here all the information you need. Or a Notion one made by Cake. I recently started using this one. As you can see, I have each month here, and the one we'll be using here is just one I use for tests. So, I have here model, means the strategy I used on the trade. Then I have the date of the trade, day of the week, session, London, New York, Asia. Environment, red news, no red news, depending on each day. Time window, type, long or short. Then I have Confluence, and this one is with a drop down. I'll show you in a bit. Type of account I used, risk per account, a percentage, how the trade worked, if I took partials or take profits, where I got stopped, break even or in a loss, my target, the result of the account in a percentage, and the result of the trade in dollars. Then the last ones, the asset I used, the confidence of the trade, and how I felt in that day. Now I create a new one for the trade we took, which will be a Confluence trade. And we have the date, which was January when we entered 14. So we go back, so we make it right. This was the day. Session. What time did we enter? Session was going on a lower time frame. Let's see. I don't remember. I didn't check the time. We zoom in. And our entry was at this candle here, which is 6 p.m. New York time. So it was during New York. Time window, it was New York PM, and the Confluence. So the Confluence we had here was 382. So we have a Fib algo, a VWAP, and we also had a market structure. In this drop down here, as in every other drop down, you can remove or add confluences based on your style of trading. Then we have the account. Let's say we use our live account. Risk per account as a percentage. This one you'll have to calculate based on your account size. So let's say we have a 50K account. So our stop loss was $744. So our risk per account was 1.5%. And the result in percentage, if we add the two take profits, and we get 17,998 plus 10,967, we have $28,965, which for a 50K account is pretty awesome. It's 57%. That's good. So we go back to Notion and we take here 57. Now our trade had a partial take profit and a full take profit. Our target was a fib extension and also external liquidity. If you remember, we had those lows, the main low here, which was a swing failure pattern. If we go back here, this one was external liquidity. Okay, and the asset was BTC. You can add here whatever you want. If you want to add, let's say, if you just click create, and now you have it in your dropdown. Our confidence score was high because we had Confluence, everything was aligned. Rating is also good, we had everything we needed. And here you can add more properties. How did you feel during the trade? We were okay, we were tired, sick, or overconfident. Let's say we are okay. Our P&L was 28,965 and this one was a short. On the comment section, you can add the explanation of the trade or more reasons for how you felt or why you took profits early or why you closed early, if it was a FOMO trade or whatever you feel like it's important in your day-to-day trading. So I'll write the technical analysis. Price made 3 waves down, looking for a wave for correction in order to short for wave 5. Entry was on a 30-minute market structure break with a retrace in Fib Algo 382. Take profit 1 was 1-to-1 for wave 5. Take profit 2 was 1618 for wave 5. And I also add here stop loss break even after take profit 1. And we also need to add a screenshot of the trade. So we go back to our chart and we take a screenshot of the daily like this, and we save it in pictures and we name it screenshot 1, save. And another one with the entry on the lower time frame. We go back, this one here, and we had the Fib retracement here for our entry from the high to the low, which was on the 382. So we take another screenshot for this one and we save it, screenshot 2, same in pictures, save, and we go back to our Notion and we add the files. From pictures, screenshot 1 and screenshot 2, open, and we have it here. And this is it. This is how we review our trade. My usual steps are like this. I start and open this trade review as soon as I open the trade. I add the date. I didn't select the day, okay, of the week. And I fill the tabs that I already know. The day of the week, session, Confluence, how much I risk, and what are my targets for take profit. And then when the trade played out, I come back and I add the results for the account, the winning or the losing P&L. And this is how it looks like on our table here. We have everything. You can also change things right from here. If you want to learn how to trade with Confluence, like we did in this educational video, or how you've seen me doing in every Monday's update on Bitcoin, you can join our Spitfire Discord group. There are 2 types of subscription. The cadet one, which is only $50 a month, and it gives you access to the entire educational library. And the pilot one, which gives you access to the educational library and also to the daily live streams with real live trading. So don't forget to check the description below for more information. Hopefully this example showed you that journaling is much more than just recording numbers in a spreadsheet. And it's also understanding about why you took the trade, how you manage the trade, whether you followed your plan, and what you can learn from it afterward. Because every trade leaves clues, and the traders who improve the fastest are the ones who take the time to study them. And remember, a journal won't make you profitable overnight, but it will help you identify the mistakes, habits, and behaviors that are holding you back. Over time, those small improvements compound into consistency. And consistency is what every trader is really chasing. In the next educational video, we are going to cover one of the most misunderstood concepts in technical analysis, basic Elliott Wave. We'll break down how markets move in waves, why trends don't move in a straight line, and how understanding market cycles can help you identify where price is likely within a larger move. We'll also connect this to one of the most widely used tools in trading, Fibonacci, because once you understand how impulsive waves and corrective waves work, you will start to understand why Fibonacci retracements and extensions appear so often in the market. I'll see you in the next one. Until then, take care. Bye bye.